Hey, family, I want you to take a deep breath, okay? Right now, I know the news cycle is loud. There is war, escalation, global instability being spoken about everywhere. And then when the word war shows up, the market generally reacts. But here is what we don't know. Don't panic, because panic is expensive. And I want you to zoom out a little bit, okay? Historically, when geopolitical conflicts break out like this, whether it is the Gulf War in 1990, if you remember, even the Iraq War in 2003, Crimea in 2014, or more recently, the Middle East escalations that are happening with Donald Trump actually, sending some bombs to Iran. The stock market typically drops fast and then recovers even faster, more than even people expect. In many of these cases, remember that the S&P 500 was higher 6 to 12 months after all of these geopolitical conflicts historically. Why is this the case? Because markets price in fear quickly, but businesses will always still keep operating. Cash keeps flowing and their doors are open. Innovation doesn't stop. And now I want you to listen to me carefully. Short-term volatility is emotional. Long-term growth is mathematical and calculated. The US stock market has averaged roughly about 9 to 10% annually over long periods, whether it is through wars, recessions, pandemics, political drama, oil shocks, all of them put together. World War One, World War Two, the Cold War, 9/11, 2008 financial crisis, COVID, the invasion of Iraq, name it, the stock market has gone up. And yet in the long term, the trajectory is going up. That doesn't mean there won't be temporary pain. I need you to understand. There might be. Oil prices might spike. Defense spending might increase. Markets may swing 2 to 3% in the day, but volatility is not collapse. By now, you should know that as part of my community. Now, I want us to talk about practical stuff. If tensions rise, certain sectors historically see increased attention. And this is where smart investors like you in this community should understand. Defense and aerospace companies, energy companies, cyber security companies. Some ETFs people often look at in times like this include an ETF like ITA, the iShares US Aerospace and Defense ETF. XAR, which is a Spider Aerospace Defense ETF. There is also PPA. And some individual companies people also tend to look at during times of geopolitical conflict. You have a company like Lockheed Martin, Northrop Grumman, Raytheon, General Dynamics, Boeing, because these are companies that produce military weapons. Energy companies to become part of the play, like ExxonMobil, like ConocoPhillips. But this is not about chasing headlines. I want you to understand me. This is not about turning your portfolio into a war trade portfolio. No. If you are building wealth steadily and in a disciplined way, like I coach every day, broad index funds, diversified ETFs, long-term compounding, you don't need to abandon your strategy because of a news cycle. You stay consistent, you stay allocated, you keep dollar cost averaging into your positions. We rebalance your position once a year when necessary. You protect your emergency fund. That is what ownership is all about. Remember what I teach every day. Clarity, protection, multiplication, ownership, acceleration, and perpetuation. Clarity is what protects wealth, guys. Psychologically, here is the real danger I want to make you know. When markets drop, people feel like they are losing. But indeed, you are not losing because it's just paper losses. In reality, if you're still earning income and investing, you are actually buying future cash flows at a discounted price today. I want you to understand that. Volatility is uncomfortable, but it is also the entry point for long-term wealth. The market does not reward emotional people. It rewards disciplined ones. Could these disciplined people be you? Could this situation escalate? Possibly. Nobody knows. Could markets stay volatile for weeks? Yes, they will. But historically, wars and geopolitical shocks do not permanently derail long-term economic growth. I want you to understand this deal, guys. America has endured far worse, and innovation is still happening. AI is still advancing. Robotics is growing. Companies are still generating profits. The global economy doesn't freeze because of headlines. So here is what I want you to do. Do not make emotional decisions. Don't sell off your positions. In fact, don't look your portfolio this week or next week. But you know what? After a week, we review your assets. Make sure you have your 3 to 6 months of expenses cashed in, saved in a high yield savings account, your emergency fund. But continue investing systematically if your income is stable. Now, let me tell you, if you want sector exposure, do it intentionally and proportionally, not reactively. Don't go and tumble out your whole account and try to buy world stocks. We build wealth through systems, not reactions. And long-term planning is critical. The market has rewarded patience at roughly 10% annually over decades. That trend has survived wars. It has survived presidents. It has survived pandemics and policy mistakes. So this moment is no different. This moment too will pass. And 5 years from now, most people won't even remember the panic, but they'll remember something. They'll remember whether they stayed invested, because at that time you will feel it in your finances. So family, this is not the end. I just want to encourage you. This is a test of discipline. So stay calm, stay strategic, stay long-term, because we are not just trading headlines. We are not traders. And I know you're not, because my community is not a community of traders. You are building legacy. You are building wealth for the long term. And you know what? In all of it, you